This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, March 23rd, 2015. Euro dollar. So the euro has done a really good job recovering in recent trade out from those fresh 12-year lows at 104.62 several days back, and this recovery could now extend following a bullish reversal week in the previous week. Key resistance now comes in by last Wednesday's high, which comes in at 10.42, and a break above would then expose the 10.98 previous support. At this point, there is still room for additional corrective upside, but only back above 115.35. The high that we saw back on the 3rd of February would ultimately compromise the downtrend. Anything in between would be viewed as corrective, with a lower top sought out somewhere ahead of 15.35, ahead of the next major downside extension below that 104.62 low, and possibly down towards parity. Sterling dollar. So cable has also put in a nice little bounce following recent lows, recent multi-year lows at 46.35, and the market also putting in a bullish reversal week, a bullish outside week in the previous week to set up the potential for a fresh upside over the coming sessions. At the same time, there is risk for a lower top somewhere ahead of the 153 area in favor of a continued downtrend below 46.35 and towards 140 further down. At this point, with cable only back above the high that we saw on the 26th of February at 155.50 would compromise the current downtrend. Dollar yen. So dollar yen has pulled back a little bit in recent trade after recently trading up to fresh 7-year highs above 122, just over 122 at 122.03, with setbacks now reaching the 119.30 area thus far. There is room for additional weakness in the market down towards the 118 area, but ultimately the broader structure continues to be highly constructive, and any setback should be very well supported in the 118 area ahead of a fresh upside extension beyond 122 and towards next key psychological barriers at 125. At this point, only a break back below the December base at 115.55 would compromise the constructive outlook. Euro Swiss. So Euro Swiss has been mostly consolidating over the past several days, with the market slowly trading lower off that recent high that we saw at 108.15. But given the recovery that we've seen from those critical lows that we saw several weeks back in January, the recovery outlook does remain intact while the market holds above 104.15. A break back above 108.15 would then open the door for a fresh upside extension towards the 110-112 area further up, and only back below 104.15 would compromise the constructive or the recovery outlook in Euro Swiss. Aussie dollar. So Aussie dollar has done a good job of bouncing out from those fresh multi-year lows that we saw at 75.60 back on the 11th of March, but any gain should be classified as corrective, with the market still seen well capped below 79.13, the previous lower top. At this point, only a break back above 79.13 would delay the immediate bearish outlook, while a break below 75.60 would open the door for the next major downside extension towards 70. Dollar CAD. So although dollar CAD recently broke to fresh 5-year highs above 128, trading to 128.35 last week, the market is still comfortable correcting and being locked in a more well-defined consolidation, roughly defined between 123.50 and 128. At this point, eventually the market is seen breaking higher above that 28.35 high towards the 130.65 2009 peak further up, and any setback should be very well supported ahead of that previous base at 123.50. Only back below 123.50 would compromise the immediate bullish outlook. Kiwi dollar. So Kiwi has taken out some key resistance today at 76.15, with the market trading up as high as 76.65 thus far. Ultimately, the market is still locked within a broader underlying downtrend, though the break above 76.15 does delay the immediate bearish outlook and does suggest that potentially we could see more gains before the market stalls out and heads lower. At this point, only a break back above 78.90 would really compromise the more meaningful downtrend, while a lower top and break back below 71.76 would do a good job of opening the next major downside extension towards 65. SPX 500. The recent bounce off of support at 2040 opens the door for a fresh record high above the recent record highs that we saw at 2120. A break above 2120 would then open also a measured move objective towards the 2200 area further up, following the consolidation that we had seen, or the correction that we'd seen from 2120 to 2040. That was an 80-point move, so a break above 2120 would open a fresh 80-point move higher towards 2200 before the market considered the possibility of some form of a top. Gold. So gold has recently recovered after stalling just shy of that critical base at the critical 2014 base at 1131, and the recovery has now extended up towards the 1187, 1188 area thus far. The market will, however, need to break back above 1223, the high that we saw on the 2nd of March, to officially take the pressure off the downside and suggest that we are putting in this more meaningful base. But inability, or until we do take out that level, the pressure remains on the downside, and the market could be looking for a lower top ahead of a retest of the 1131 2014 base.